Hey, what's up? Welcome to KT Confidential, the real estate podcast. In today's episode, we are here with Neil Drepaul from Canadian Mortgage Services talking about the 2024 mortgage forecast. Enjoy. Welcome, Neil.
Thanks for having me.
Yeah.
It's nice to finally do it.
For everybody listening, welcome back to KT Confidential, the real estate podcast. Today we have a guest on the show, which we don't do enough. We've got Neil Drepaul from Canadian Mortgage Services. And we're going to talk mortgages and finances today.
Great. Well, I think I know a little bit about that topic. So
Yeah, I really like your website, by the way.
Thank you.
It's very easy to navigate. I was listening to some of your podcasts.
I appreciate that. Yeah, we put a lot of time into the website. It's a huge component of our business. So
you and I met, I don't remember when it was now.
Oh, let me tell the story.
Okay, go ahead.
Okay, so I saw...
Well, hang on.
Okay.
Continue that. Tell the story, but then get into your origin story. Tell the listeners and the watchers and followers a little bit about you.
Okay.
Yeah.
Well, I met
What's
Adrian
your superpower?
at LA Fitness, but it's because I had seen an ad on Instagram that you guys had started doing.
I remember it very clearly.
I actually remember the topic too. It was something about buying a house versus getting married, which I'm sure you guys got a lot of heat for.
I think I was doing deadlifts or squats or something.
Yeah, you were. And then, so I pulled up the ad because I had saved the ad.
That was the last time he's done
That was
a
totally
deadlift.
the last time I was there, yeah.
I had saved the ad because I wanted to show my business partner, Amin, and just say, like, I really like what they're doing here. And I started following you guys and watching your videos. And I'm like, we should start doing this. But then I saw you at the gym. And so I pulled up the ad. I'm like, is this you? And you were like, yeah. And then we started
I pulled out my Sharpie and said, where do you want me to sign?
But origin story. So I've been in the business now for 11 years, started in 2012. And so my dad actually, so it's a business my dad started in 1980.
Hang on, go back further.
Go back further?
Go back further.
Okay.
Where were you born?
Where were you born?
Seriously,
What brought you? Yes.
Where was I born?
Yeah.
Okay. I was born.
You can summarize the first couple of decades, but
I was born at Peel Memorial Hospital, which is no longer a hospital.
Yeah.
It's probably just a medical building now in Brampton. And so born and raised in Brampton. And this seems like a stretch, man. Really? That far back?
Yeah.
Okay. I don't know how far. Okay, so as a kid, played hockey and soccer. So that was my thing, which I wish I never stopped because I was really good. I don't know why I stopped, actually. I think just hit high school and just focused on that for whatever reason. So I wish I still played, and maybe I'll get back into it eventually.
I think there's a lot of people like that. Who they wish they, or parents, like I respect a lot of parents who push their kids to do things despite wanting to give up.
Yeah. I wish my parents had done that, and they didn't. And I wish they did, because not that I would have taken it very far, but I really did enjoy it. And it's like, it feels like there's something missing from my life now because I don't have that extracurricular. So I'd love to get back into it. But anyways,
Hockey or soccer?
If I had to pick one, probably hockey. Soccer's still fun, still enjoy playing, but hockey for sure.
When was the last time you did like a stick and puck or actually shot a puck? When was the last time
you charity game that we did when I was in university? So it's been a while. Yeah, at least 15 years.
Wow.
Yeah.
You two should just go. You go to the rink sometimes on don't they have those days where you can just
It's called stick and puck.
Yeah. Okay.
And you have to wear a helmet. So helmet, gloves, stick, and puck.
Yep.
And you bring a few pucks. And now
there's no goalie.
Well, it depends. If you get enough people to go, then you get into what they call shinny.
I was going to ask, is shinny the same thing as stick and puck?
No.
What is stick and puck?
So
what's the difference?
Stick and puck, you're not wearing any equipment.
Oh, okay.
You're just going like you are. You have to wear a helmet.
Yeah.
But everything else is, and obviously you just can go by yourself and just stick handle and shoot and whatever. Shinny is where you'll get a group of 12 people
just
or
for
more.
fun though.
And that's like equipment from the waist down usually, or is it full
Shinny?
Gear? Yeah,
I think now they might even be full. You have to be fully
okay
geared up.
Yeah.
But yeah, so probably last February, I decided this year, which I haven't yet because of a couple of injuries, but I'd get back into the stick and puck just to get the feel. Because when you haven't played for so many years, like you and I, it's weird at first, but it's great exercise. And we're blessed in Milton to be surrounded by a lot of rinks.
Mm-hmm.
So there's always an opportunity to go. So I got some new gear last year when it went on sale. So maybe that'll be an opportunity.
I still have my bag full of gear that I'm sure still fits.
So
I'll make do.
After university,
So even before university,
yeah.
So my dad, when the major recession hit in the early 90s, he closed down his office and he had employees working for him. A lot of them, unfortunately, were doing shady things and taking money under the table. And he hated that. So he closed down the office, kind of fired everybody, started working from home ever since. So growing up, my entire childhood, I knew about the business. I was kind of involved in it.
So he was always in the mortgage industry.
Since 1988.
Yeah.
That's when he started the business. So
that guy saw every...
He's been through every phase.
He's been through every recession, every up and down.
So it meant a lot too, because it's like now in hindsight, it was the year I was born. That's not why he did it. It was just all coincidence, but it felt like the right thing to get into. And growing up, I was involved in the business from helping him send faxes to answering the phones at times. So I was so involved in it. We were actually cleaning out the basement a couple of years ago, and I had found logos that I created for him on sticky notes with the dates on them, and they were from like when I was like 7 or 8 years old or something like that.
Wow.
So it was really cool.
That's cool.
I've had a lot of involvement. It's been very close to me, but I never felt obligated to get into it. It's just something I felt kind of like, it was like a rite of passage. It just felt like the honorable thing to do was to take over the business or be a part of it. And I was excited to. So even though I went to university, I went strictly because it felt like the right thing to do. I guess get a post-secondary education. Maybe that's not so true anymore for people. And for people that don't go, I don't blame them, because I mean, you learn some skills, but a lot of people don't end up working in the field that they get a degree in. But I went to university anyways. And then after that, I was just ready to just hop in with both feet and get involved in the business. And my dad was like, I really think you should just go out there, work for somebody else for a while and get some experience. And I'm stubborn. So I'm like, no, I'm ready to do this now. And so within months of finishing university, I got my license. And I didn't convince my business partner and brother-in-law to get into it as well. But my dad had always mentioned to him, hey, you should get into the business. And like he was trying to invite everybody from the family to get into it. And so Amin ended up getting his license too. And I still remember the first day we kind of set up shop in the basement, which was my dad's office at the time. And he had renovated it to be an office. So it felt like an office, but I put a pot of coffee on and I kind of just sat there at the desk and twiddled my thumbs and waited for calls to come in. And I still remember the first deal I ever did. So that's how I am.
People
here.
say don't get into business with family.
Yeah.
What is your response to people that say that?
I get why people say that. I understand it. My dad and I butt heads in the beginning because I wanted to do things in a certain way, even though I didn't really have a say. Very inexperienced. All I knew was that I was creative and I wanted to do certain things with the business. And he was maybe less creative, but very experienced in the work itself. And so we clashed a little bit in the beginning. And then I don't remember how long it took, but eventually we got to a phase where he felt confident in our ability to run the business the way we wanted to. And that's kind of when his involvement phased out. He's still involved, but he probably will be retiring his license soon just so he can truly enjoy retirement.
This seems like it's in your blood then. It's natural for you.
It feels like it.
Yeah.
So there's a lot of pride that comes with it for that reason. And I think it could have been anything. Like I do love what we do, but I think it could have been any family business and I would have felt that way. Some people want nothing to do with a family business and I wanted everything to do with it. So I don't think it would have mattered what he was doing. But I'm happy that we did it and we got really good at it. So now we're here.
So now we're going to pick your brain.
Yeah.
Dive into all of your experience.
Okay.
We're going to throw some questions out at you.
Sure.
So totally unscripted for those of you watching or listening. Adrian, do you... So just so everybody knows, this was actually not really planned because the two of you were going to get together for a coffee or something.
That was
chat.
the original plan. Yes.
So we are having a coffee and chatting. It just happens to be, we turned it into
With
a
some
podcast.
cameras and lights.
Yeah.
Yeah. No pressure.
No pressure.
Yeah, and Neil was surprised to hear, perhaps would be the right word, that we don't edit from the perspective of there's no cutting. Whatever we say is on the podcast, video and audio.
I was just worried about saying something stupid, and then
We say stupid things all the time.
You're right. You do.
And
I
then we
watch
call
a
each other
podcast.
out on it.
You're
so
absolutely
stupid.
right. Yeah.
That was dumb.
You want to get going with
Yeah,
your
so
topics and
the
questions?
premise of today was, well, the reason, first of all, which I'll come back to, but
you want another don't? Filler words, right, Robbie?
yes, we've been working on avoiding filler words.
I've been
And
practicing. Over
Sometimes
the
I
years.
mean speaking slower and
Yeah.
being more
And-
thoughtful of what we say.
And a couple of podcasts ago, we learned what filler words are.
The actual words,
Yes.
I don't remember
You
them.
just learned what filler words are.
Not the premise of them, but
Oh.
the actual words that are generally used as filler words.
Okay. Like that. And you say, "Oh, okay."
I think that's okay, though.
Is it?
I think so.
We'll find out.
What were
We'll
they,
see-
Robbie?
We'll see what AI removes.
Yeah.
You know, that's the one that we debated.
Like, yeah.
Yeah.
Well, that's ahs and ums. So the reason I wanted to meet with you originally was because call it a pilot program that I'd like. Oh, damn it! See, now I'm very cognizant of.
But you
when
paused.
I say it.
You still
Yes,
paused and threw in the It's really hard to master.
it is. So we wanted to pilot this program where. So what happened was the other day, I sent out an email. So we have two companies. One is the Kormendy Trott team, real estate and leasing, sales and leasing. And then we have KT Property Management, where we manage residential properties. And I sent out an email recently to several, to all of the tenants in our portfolio, which is about, I think there's like 40 people. And the premise of that was, one, just to notify them of things to do during the winter season, such as, well, the primary reason was don't use salt on concrete.
Yeah. Okay.
Because we've had issues with that. And then I just dropped in a little thing at the bottom and made this thing called Path to Ownership and just said, hey, we're working with several tenants who would like to be homeowners, and we've got them on our Path to Ownership program where we're working them through the process to get them there.
Okay.
And I said, if you'd like to get involved, fill in this form. And we had 2 people respond. And I think there's a lot of tenants out there that would like to become homeowners. So the reason I wanted to meet with you originally was primarily to get your input on how that could look from a mortgage broker's perspective.
Okay.
Like my thought was we connect the tenant with the right people to get them on that path. We also have a money savings tips guide, which I think a lot of people can benefit from a savings perspective, looking for opportunities to save and opportunities to earn extra income.
Okay.
But where a mortgage broker would come in is giving them a true understanding of what they need to, what they can afford, or what they need to do to be able to afford it.
Okay.
So do you get a lot of people that come in for a mortgage approval and they're like expecting to be approved for X amount of money and then they realize they can't afford a house at all?
Yeah, it happens all the time. And it also happens in the reverse way too, where people think they won't be able to get qualified and they can. It's just because the math doesn't lie and it's not an easy calculation to kind of figure out on your own. You can go and use a mortgage calculator online, but there's a lot of variables there that are not included in those calculators. Mortgages are just a big gray area.
Can you give us some examples of that?
Yeah, like so debt as an example, people underestimate the amount of debt that they have, or they include the wrong debts that are not generally accounted for in GDS, TDS ratios. So it kind of skews numbers a bit. A lot of a lot of these calculators, I don't believe are calibrated to account for the stress test and accurate property taxes too. So people are just putting in filler numbers in there. And I just don't think it's the most accurate way. Now, they are fairly accurate. I just think there is a big margin of error that occurs when people are trying to do it on their own. But you'd be surprised. There are people that think they can afford a very expensive house and a large mortgage, and they can't because they don't have their finances in order.
So they just see the monthly payment and say, okay, that's manageable, but they don't understand what it takes to actually get approved for that.
So a ton of people, actually, the funny thing, a ton of people will compare just what they're paying in rent to a mortgage payment and say, well, if I'm paying this in rent,
Right.
I can pay this for a mortgage. Well, in theory, that's true. If you can afford $4,000 a month for rent, I know that's an exaggeration, but you can
Not
afford
so much anymore.
maybe not. Yeah. So then you can afford $4,000 in a mortgage payment. But the problem with rent is there aren't measures in place to make sure that you can afford everything else. There aren't debt servicing ratios, so to
Right.
speak. So is your rental payment, what does that represent? Is that 70% of your net income? Is it 80%? Who knows? But the banks have measures in place to make sure that you can only afford a certain percentage of your gross or net income or household income, so that there's a buffer for all of life's expenses, car payments, food, groceries, taxes, you name it, right? So that's one thing that when people are using those online calculators, they just can't make that judgment for themselves. So they're not as accurate. But to your point, a lot of the times people think they can afford something and in reality they can't, or on paper they can't. And then the opposite is also true, where they have no idea because they've never thought about it to that degree.
I think I've told this story before, maybe 20 years. It would have been 20 years ago, almost exactly. I was the financial services manager at a Lexus dealership. And as Adrian knows, because he was in that position, you sit down with somebody that's looking to lease a vehicle, you take their credit application, and then the financial services manager reviews that application and sends it, in that case, to Toyota Financial Services or to potentially another lender, Bank of Nova Scotia, Bank of Montreal, whatever. So I took this application for a gentleman that wanted to buy a Lexus convertible, the SC400. And at that time, it was nice car. That was like the creme de la creme back in the early 2000s. And at that time, it was a $110,000 car. There weren't a lot of vehicles over $100,000 in the luxury market, even. Anyway, the salesperson assisting him was one of our highest producing Lexus salespeople, one of the highest producers in the country. So you would have thought, that person is qualified and they went down the path of spending hours together, building the car, appraising their old car, all of this. Anyways, so I take the application. He was the conductor of the Toronto Symphony, making $300,000 a year.
Back then.
Yeah.
A lot of coin.
Yeah.
And I'm like, whew, no brainer. All right. Filling it in, send it off to, back then you had to fax it over to Toyota. I get a call later that afternoon and they sent a fax back, declined. I'm like, declined? So I call them back. I'm like, what's up with this decline? Guy was at like 95 or something % of his debt servicing.
Wow.
On a $300,000 income.
So in the car industry, you guys debt service as well?
Oh yeah.
No, I say you guys, sorry, just because you have car experience,
Yeah.
but not that you do that anymore.
Yeah.
But you guys debt service as well? Okay.
They look at the TDSR.
They look at it's very similar. So they look at the debt servicing and then they also look at the loan to value. So you get, I remember there was times when, I remember one specific time I had somebody, and they actually approved it for some reason, but we had a Hyundai Accent, which was maybe a $10,000 to $15,000 car.
Yeah, max 20.
Yeah, and I don't even think it was that high. But the finance amount was 30, and it was because they were bearing a
Negative
deficit
equity.
from the previous car. I sold them everything possibly that they could add to this
Yeah.
car, and they got approved. But in many, that one surprised me, because usually when you have that ratio, they won't approve it. But
That's crazy. I until you mentioned that story, I thought anybody could get a car loan. I didn't know they debt serviced. And the reason I'm saying that is because one of the biggest hindrances to people's finances when they're looking for a mortgage is usually a car loan. And they usually have a car loan before they apply for a mortgage. And I wish that wasn't the case, because sometimes that's the thing that pushes their numbers over.
Yeah.
But a lot of the times those folks don't have amazing credit either. So I'm like, how did they get this car loan?
You know,
I
it's
just
funny
assumed they would
because
give it to anyone.
in automotive, when you're looking for money, there's always somebody to lend you the money.
That's fair. Okay.
It just depends on at what rate, what terms, what conditions.
So it's actually not that different from what we do,
Not at
because
all.
in reality,
No.
there's always someone that'll give you money in our industry too.
just
Right.
at a higher rate. And
Much higher rate.
Yeah.
Yeah.
And maybe the compare or the similarities between, it's funny we're talking about that, but if you think about it, there are a lot of similarities between getting a loan for a car or for your house.
I would always tell people that it's harder to get a car loan than it is a mortgage, because, and I don't know if it's true or not, it was just what I would say. Because
Depreciating asset versus appreciating.
Well, not even
Hopefully
that. More
appreciating.
just if they want your house, they know where it is.
Right.
And if you stop paying
Yeah.
your car bill, there's no guarantee they're going to find your car.
Except for those lenders that
Put a tracking device
make
or
you
something.
have a tracking
Do
device.
they do that?
Yeah.
Oh,
yeah.
interesting.
Those repo men will find you though.
Oh yeah,
They'll find
those
you.
guys are awesome. I
Yeah.
love those shows.
But how often do you see somebody, and you'll see that too from the applications, they're making $100,000 a year and driving a $100,000 car? It's like, okay, you're spending $1,200 a month on your car payment. Isn't that a bit excessive? You know?
We see more than we'd like to. Yeah. It's like before I hit submit when we're pulling a credit report, I'm just like, please don't have a massive car loan.
Yeah.
And a lot of the times they do.
I've had instances where people get creative because lines of credit, regardless of utilization, are calculated as fully utilized, right? Or partially. Like, so if you have a $100,000 home equity line of credit or $30,000 unsecured line of credit,
Mhm.
when they're doing the debt service ratio, even if you're at a zero balance, they'll calculate it based on a full balance.
It's actually not true.
That's not true.
No.
How do they do it?
They calculate it based on the balance, but they use 3% per month as a repayment just for underwriting.
Okay.
I know that's so
3% of the
Total amount.
balance of the balance owing. So don't worry about the total amount. Don't worry about the limit, let's call it. They're more concerned about the balance owing, and they'll use a 3% per month repayment on that, even though in reality, your payment is not 3% per month. So that's the buffer that they build in, but they won't do it on the limit.
I've been told otherwise by other mortgage brokers.
I have
It's
as
certain
well.
banks will.
So certain banks calculate it differently. then.
Even so, by default, when we pull the credit, the underwriting system that we use now is calibrated to just use a 3% per month repayment. It won't even let you override it.
And it doesn't matter if it's a home equity line of credit or unsecured.
It doesn't technically matter. Like I've seen instances in both scenarios. So if a mortgage broker said that, they're not wrong about it, but in most cases they are more concerned about the balance owing, especially on unsecured debt. Home equity line of credit may be a little bit different. I think it's very case specific.
Okay,
Yeah.
Good to know.
It's amazing how you can manipulate some of the numbers when you move things around, right?
Yeah. Well, and this is why it's important. And then I'm a big advocate of mortgage brokers over bank. I don't even know if they're considered brokers.
Mortgage
they're just
specialists.
agents or specialists. Yeah.
Yeah.
Because you have a lot of options. So depending on the specific circumstances, the type of income, self-employed or employed, whatever, you can you leverage your database of lenders to choose one that suits the person best.
I do think there is some benefit or leverage that you get when you have a mortgage with the lender, or in this case, a bank. You do your primary banking. So if you have the mortgage with them, the Visa with them, a line of credit, a checkings, a savings account, like if you got some RSPs, a GIC.
I get like loyalty discounts or something.
You get preferential treatment. You get better rates, potentially. You get all of those fees waived.
Well, in some banks, like RBC doesn't work with brokers, right?
They don't have a broker channel, no. They like to network with brokers a lot. Like you can send them business if you have a referral partner, so to speak. But
is that like off the books?
Yeah.
Okay.
Yeah.
Tell us the dirty secrets of the mortgage
can we
industry.
backtrack?
Let me get back to the question I had though. So let's say you have somebody come in.
Sure.
And well, let's give you an exact scenario and say it's one of these tenants that is like, okay, I'd like to buy a house at some point.
Okay.
Let's say they don't get approved. But you, based on now you've got knowledge of their income, their expenses and whatever. Where does your relationship with them end? Is it just saying, sorry, you're not approved? Or is it, do you ever get into, okay, well, this is what you need to do. You need to save up X amount of money. And how long will it take you to save that? Well, let's circle back in 6 months or a year.
The relationship never truly ends. Like we don't put an end to it. We're kind of like, oh, see you later kind of people.
Right.
So we do spend a lot of time with clients that won't be clients for a really long time. We've done that. We've nurtured deals over the course of 3 to 4 years before until they've materialized into business for us. And we're fine with that because it's all about resources. We want people to get in homes. It's not just about a deal now, a paycheck now. We can be a good resource. And we hope that people are disciplined enough to follow our advice. A lot of the times they're not. It's really hard to break someone else's financial habits.
For sure.
Spending habits. Going back to the whole car thing as an example. I mean, this doesn't apply in every case, but to be honest with you, like nobody gives a shit about your possessions. This is what I always tell people. Like people don't care about the things you have as much as you care about the things you have. So if you are trying to save for something, you have to be willing to buy less expensive things.
Yeah,
at the risk of not having that social currency when you're out in public, whether it's something you wear or a spending habit that you have or a vehicle or whatever it is, or eating out at fancy restaurants. I'm not saying don't ever do any of those things. You have to enjoy life a little bit, but especially when you're trying to save for something, you have to limit what you're buying, what you're spending your money on.
Too many people have ambitions of upgrading their home or buying their first home and don't have an actual plan.
Or budget.
Budget
is probably the key word.
Or a plan to achieve their budget, their new budget.
Yeah.
Because oftentimes it takes sitting down, looking at where all your spending is or is going, and then realizing where you're going to save every month compared to your current spend, and then actually sticking to that.
Right. If you can't see where your money is going, like you have to be able to visualize money in, money out to know where it's going and where you can cut back to actually add towards savings.
I'm so upset they're shutting down mint.com.
I didn't know that.
Yeah.
I'm not surprised.
What is
Mint?
mint.com?
It's a great source. It's
Mint. It's owned by. It's now owned by
Intuit.
QuickBooks, the same
QuickBooks.
company that owns QuickBooks. Intuit, yeah, maybe
something like that.
And it basically funnels in all of your accounts and gives you your entire portfolio. So I have banking with basically all over the place and with our multiple businesses and many credit cards and things like that. So it brings all of your expenses, all of your income, everything from every bank account, and it gives you a screenshot of what are your expenses this month. It even learns your habits and categories, so it will understand SO is gas, It will understand Superstore.
It's great for
is
searching for things. If you're trying to
Yes, at the
search
end of
for
the
all
year,
of your gas,
Hydro, as an example.
might-
I do that all the time.
Yeah,
Hydro
exactly.
breaks it down.
It's great for people that are self-employed. They have to tally everything up at the end of the year,
It-
which is usually when they wait to do things.
I think
Yes.
it's great for everybody because
especially
a lot
in
of
this
people
scenario.
don't realize how much money you spend at Tim Hortons every month.
Mhm.
What does that extrapolate over the year?
Yeah.
Holy shit, I spent $1,500 at Tim Hortons.
Well, I got into a bit of a debate with somebody on Facebook recently who was saying, I can't remember exactly what she said, but it was along the lines of, the premise of the conversation started because people were complaining about using tellers at a restaurant or at a grocery store, or cashiers rather, or a self-checkout. And then it got onto cash versus credit. And anyways, it got very off topic, but the premise was that she was saying you should only use cash. And I was saying for the vast majority of people, it's a bad idea.
I
And
never use cash
I
when
don't-
buying things.
I don't either. I mean, Visa credit cards have many benefits, from points to tracking where your money's spent, which is where I was going with that.
Exactly.
If you're pulling out cash every month or you get paid in cash, whatever, you have no way of knowing at the end of the year what you spent it on. So, and not to mention also building your credit.
So what was her rationale behind that?
Well, she was a little bit of, she was conspiracy theorist. She was going into the direction of digital currency and the government is going to control you.
Oh, okay.
So it was a bit of like, she was the far extreme of it.
Yeah.
And I realized very quickly that's not somebody you can have a logical conversation with. And she did get me at one point though, because she said, well, when Rogers went down, nobody could buy anything for the vendors that use Rogers systems. But my point is, for the average person, and probably for people,
Yeah, but that could be said about anything in life now.
yeah, you know,
If an internet goes down, a satellite goes down, or whatever, we're all technology.
yeah.
When you live in a country that is so dependent on credit, we don't live in France. France doesn't have a credit bureau reporting
They
system.
don't have a credit system.
They don't have credit. Yeah. When you live in a country where everything's dependent on credit, you can't live by
So
that
how
philosophy.
does that? I don't understand how that would work then.
I don't know how it works. I just know they don't have it. Yeah.
You fix my lawn, I fix your kitchen. So
Barter system.
Yeah.
You know, I'm a big believer. So I don't pay cash for anything really anything. I use my Visa for everything so I can track it, collect points, build credit. It's easy.
If I ever have cash on me, I usually give it to like the Salvation Army people standing at the front door. That's it.
Well, now even that you can pay by your
Right.
credit. You just tap. But as those that follow and listen, no, I like to buy and flip things or sell things around the house. And most of that, if it's not on eBay, like if I'm selling something on Facebook Marketplace, I would say at least 50% of the time it's in cash. The other 50 is EFT.
Mhm.
And that cash, $50 here, $50 there. I have it in my pocket or in my briefcase. And that's the, free money.
Yeah.
So if I want to treat myself to an apple fritter like you brought in this morning, which was delicious, by the way, thank you.
No problem.
Shout out to, who was it? Where'd you get it?
Copper kettle
Copper Kettle.
and water down.
Very well known.
Yeah.
Very, very well known. And for a reason, they're magnificent. They were still warm when he brought them in this morning. So if you want to treat like that and you have some cash because you sold your old jacket from high school.
That's a real story, isn't it?
He's sold everything.
If you could think of stuff around your house that you have, I have probably sold
That's cool.
something
Okay.
similar to that.
Nice.
And I love going to auctions and the Salvation Army. And what did I buy? A few weeks ago, I bought,
Comics?
No, the book, the hardcover
Oh, World of Warcraft.
World of Warcraft. You ever heard of
Yeah.
Warcraft? Yeah. I knew nothing about it, but I know it's big. There's a lot of followers and avid players or whatever. And this book was hardcover, 8.5 by 11, had a soft touch to it.
It was like the padded hardcover.
Hardcover, soft touch.
Ooh, this must be special.
And it had a serial number on the back. And I opened it up, and this thing had never been read, or it was mint condition. And their hardcover books are $5 or $3.99. And what I didn't know is actually they were buy one, get one 50% off that day. There was another one I didn't buy. Anyway, so I bought it for $3.99, and I brought it here, and I'm like, does anybody know what this is? But I searched on eBay, because eBay is real easy. You just take a picture, or you use the UPC code as a QR code. So it scans it, and then it automatically shows you all the listings. And I go into the sold listings, and I see, oh, they actually sell, and there's not a lot of them available. So I listed it and sold it for, basically made $45 after fees and shipping. Sold it for
net 45. That's good.
Net 45
on a $3.99 purchase.
Yeah, sold it for $60. They paid the shipping. So then you have the eBay fees and
Should be careful talking too much about this on the podcast, because if the CRA determines that you do it as income, they're going to come after you. There's a fine line.
Maybe to a certain point, but eBay now charges GST and withholds that and remits it to the government for any purchases made.
I'm talking income tax.
Yeah, income tax, if you're under, I think, $30,000, you're fine. Like, how about all
but they
of
won't
these?
treat that 30 separate from what
your
you...
total personal income.
Yeah, total.
Right.
They're not going to come after you. You're fine.
No,
not for
likely.
$50.
Yeah. But I also can't use it for my mortgage approval.
No, you can't.
Actually,
Come on, Neil. I get paid in dollar bills.
How does it work with people? Like, there's so many new avenues of income nowadays that didn't exist. I mean, a couple of years ago, even. Like, I had a YouTuber. That's how he's a tenant in one of our properties that we listed, and actually that we manage. And his primary and sole source of income was through YouTube.
Yeah, but that's all documented. That's legit income.
So is that just considered self-employed income? Just bundled in as the same, or do they look at it as higher risk, or is there no
influencer? Huh?
There's higher risk.
Yeah, because you'll be making that money next year.
They want to see financials. You can't. You can. So there's A lending and there's B lending. A banks, the major banks, the big five, they're the ones that always want to see tax documents and financials. So if you can show them that, even if you're a YouTube star, and by the way, we did a deal 4 or 5 months ago for a YouTube. I call him a star. He's a friend. I'm not going to mention his name. But he has almost 1.3 million followers. He has a cooking channel. Does very well. And so whatever, we showed financials. It's all documented. YouTube doesn't mess around.
So that person, is that the sole income?
Yeah. Yeah. So there's the merchandising side of things.
What is somebody like that making currently?
Somebody like that can make, with the merchandise side of things.
Yeah.
You ready for this? Probably between 500,000 and 700,000.
Crazy.
On 1.2 million followers?
Yeah. So there's different components of revenue. There's the merch, which is probably the biggest component. Then there's ad revenue, depending on how many views you get. There's the ad revenue, and I think there's...
Hey, if you're watching this on YouTube, please make sure your friends subscribe.
It's crazy, but we just did our first deal for a YouTube star. And then to answer your question about other forms of income, a few years ago, nobody wanted to touch Uber. Nobody wanted to touch Airbnb.
Right.
Airbnb is still tricky. Most banks don't like Airbnb income because it's
short term.
Would that be considered like rental income?
It is, but it's considered like inconsistent rental, regardless of how consistent it is. And Airbnb is fairly consistent, I think, if you have a nice property that you're renting out.
It's a bit volatile nowadays, depending on where you are, but
so for that reason, they consider it inconsistent. They want to see longer term leases. But if you're claiming it and you have claimed it for 2 years, then they will consider it.
Interesting.
So the gig economy, or what we used to refer to as the gig economy, is way more acceptable now. Nobody wanted to touch it before.
What about, so I'll give an example of a waitress, waiter. They work at a nice restaurant. Maybe they're making probably minimum wage for that, because minimum wage, I believe, is still different for servers. But then they make $300 a night cash tips. Some of it might not get claimed on their income at the end of the year. We all know that. Is that like when a lender or when you look at an application for somebody that might make cash tips and not claiming it all, you know that?
You just cross your fingers when you submit it and hope they don't ask for proof of income.
Yeah.
No, they always will. If it doesn't make its way to a bank account, you can't use it. Doesn't matter. There's no exception. That's the difference. Maybe
going back to the car industry, they didn't always ask for proof. If it was a solid credit score and they didn't always ask for proof. You were fortunate enough to benefit from that one time when you weren't employed, and I think when you got your first BMW.
I didn't have a job.
Yeah. You got your first BMW while you were unemployed?
Yeah. Correct.
Okay.
I didn't have a job. I didn't have money. In fact, let's just say I had just moved in to the new house. So big mortgage. Well, at that time. No job, no income, very little money, starting to build a lot of credit debt, because that's when we started our business. And I walked into the BMW store and bought the car in the 3 Series in the showroom. It wasn't that expensive of a car. I think maybe 50 grand at that time. But I got it. I had good credit. What? So here's a question for you. When you pull somebody's credit report, I don't know if you pay much attention to the score. Do you?
It's a component of it.
It's a component. What score? Is there a number where you look at it and go, okay, this is going to, what's the threshold where the score comes back and you see 700? Okay, that's good. Or you see 650, you go, uh-oh. Are there triggers for you?
Okay, so in guidelines, the minimum that most of the major banks say they'll accept is 600. But when we pull credit, if I see something above, I'm saying well above a 650, so let's high 600, 680, 690, I'm like, okay, we're good. This is A quality credit score, no issues.
Really? High 600 is considered A quality?
Yeah. So to get the best debt servicing ratio requirements on the A side, you just have to meet a minimum 680.
Now, what happens if your credit score is over 750?
It doesn't really make much of a difference after that point in
time.
So
if you're around 700, all the way up to the 900, you're in you have the same clout.
Right. In fact, the big banks don't price rates based on credit scores.
Okay.
The B lenders do. So the B lenders have the thresholds where if you fall in this range, this is your interest rate, so on and so forth. A banks are, you either make the cut or you don't.
So hypothetically, if I have a good credit score, let's say it's 800, that'd be considered pretty good, right?
Excellent. Yeah.
And my TDSR, my total debt service ratio right now is 55 to 60%.
Yeah.
High, right? I have a home, I have a car, maybe 2 cars, got some line of credit cards, whatever. And I want to invest in real estate right now because it's a buyer's market. And I've got a 25% deposit. I want to buy a $600,000 condo because there's lots of those on the market right now for a good deal. So I got 125 grand cash coming out of my savings. My debt service ratio is 55 to 60%. I've got an 800 credit score. What do you do with it, Mr. Broker?
Strictly because of your debt ratios, you, despite your credit score being as good as it is, you are in the B category of lending.
And because my credit score is 800, do the B lenders now give maybe a little bit preferred rate, or in B lending
You
world,
get the good bad rate.
you get the good bad rate?
You'll fall in the best threshold of rates, which is going to be
But so if
680 and above.
so in that scenario, if my credit score was 680 versus the 800, I might not get the same rate.
Let's be more dramatic about it.
Okay.
And let's say your credit score is a 625.
Okay.
Then you're going to get a higher rate at 625 than you would at a score of 800.
Right.
Yeah. Now, to answer your other question, going back to the whole credit score thing, when we pull it, if it's a 650, it's kind of on the fence. It's like, it could be an A deal, it could be a B deal. Why is your credit score 650? Because if you have perfect repayment history, your score should be higher than 650. And if it is 650, it could be because of multiple reasons. But we would go through the report and then try to figure out why is it 650.
How often will a lender listen to your story about how a credit score might be arrived at? So as an example,
Divorce, or is there a very specific reason which should make the credit score less important?
Somebody had COVID and couldn't work for 6 months and had no income during that time because benefits didn't cover it anymore, or the government programs didn't cover them anymore, whatever. Somebody had an illness, off work for 6 months, and was late on 3 different payments, and it dropped the score down to a 625, and they're back on their feet.
Mm-hmm.
They got their job again, or a similar job in a similar industry, making similar money. So that elapsed. Is the lender listening to that story?
Stories are worth their weight in gold now. We're really good at storytelling, by the way. We're good at putting that together. That blurb, the underwriter wants to see that, especially if there's something of concern in that application, even if it's a small little blip, that story helps. In fact, for one of the first times ever, we are funding a deal 2.5 weeks from now, 2 weeks from now. There's 2 applicants on title. One has a 700 and something credit score. The other one has a 570. And the 570 was caused for something so ridiculous. And you can see it on the report. It's like, that should never have happened. She never would have let it happen. Who would, for something that small? And the story helped us get approved for an insured deal through one of the insurers. And that would never fly because they have a minimum cutoff. Now, the co-applicant being as strong as they are helped, but 4 or 5 years ago, they never would have looked at that. We told a story around it. We provided sufficient proof. It got approved. I wasn't expecting it to, but I was willing to try anyways. And it worked. And so that's just proof that the story helps a lot.
And I would imagine for self-employed people, even those that don't have a 500 score, but if they're somewhere in the middle, or you're trying to go to bat for them to get a better rate or better terms, whatever, having that story and knowing, like as an example, realtors now are able to be a corporation and get paid their commissions in the corporation. Some years you might, Adrian, pay yourself a little bit less or a little bit more. You might have a salary. I think you pay yourself a salary. I do not. I take dividends. So there is a story to tell.
Especially with people who are self-employed. It's actually where stories come in most handy. It's with those types of scenarios.
Okay, I'm going to put you on the spot for a couple of things.
Sure.
And I'll paint a picture.
Okay.
Because really, it all starts with the 3 of our services. When you want to buy a house, you got to find the money and a realtor. If you had a first-time home buyer that was new to the market completely. So let's say Robbie has an ambition to buy a home. And he says to me, Ariel, I want to buy my first. Are you listening, Robbie? Yes, you are. Of course you are. Says, I want to buy my first home, Ariel. I need to get out of mom and dad's house and mom's house and tired of my brothers and whatever. He's laughing. Tired of his brothers, eh? So, as a realtor, our first step is to find out a little bit about, in this case, Robbie, what his goals are. Maybe talk a little bit about how much money he has to invest in real estate. But ultimately, it comes down for us to seeing what he qualifies for, right? That would be logical first step. So for those listening that might want to buy their first home, what's your advice to set up first-time home buyers to make their process smoother or to help them get approved?
So if that person is already at a stage where they've saved up down payment and they don't require a lot of guidance throughout years to get to that point, then, and Steve Chiquetto, who I work with often through your brokerage, is huge on this. In his own respectful way, he would tell his clients, listen, I'll go out and show you properties, but I'm not going to do it until you speak to a broker and get pre-qualified. So I don't understand why it ever happens in the opposite way. And we've seen it happen firsthand where people have gone out and committed to properties, firm deals, so no condition for financing, and then only after that have gone to seek out financing. They've run into some serious problems. It happened
without starting the process at all.
Without starting the process at all. And I never understood it. So I'm not saying don't talk to.
It's the same thing. We go back to the car business. Same thing about going for a car.
Right.
You can walk into a Lamborghini store and go, oh, I love this. Let's buy one. And then you sit down in the finance office and it's like, sir, you make $100,000 a year. This car is $450,000.
Yeah. So I'm not even saying don't ever talk to a realtor until you get pre-qualified. Loop your realtor in. Say, hey, listen, I'm working with this realtor. Before we go out to see properties, we'd like to get pre-qualified. Why would you not do it that way? Let's see what your options are first. You need to know your maximum affordability. And then I always encourage people to stay a little bit under that if they can.
There's so many reasons to do it. And that's why it's a process that all of our team members follow to do that first, because you want to make sure, one, you're not looking at houses that are too expensive, because it's hard to go backwards.
Right.
It's hard. People get very discouraged when they find out they can't afford the house they did want. And then they take forever to fall in love with something else.
I told you I like the house with the pool.
Right. The other option is maybe they get approved for more than they thought they would.
Right.
Doesn't mean they want to spend that much more, but maybe it means they can move into another category of home that satisfies their needs better. And the other part too is when you have the approval, it can, especially in this market, become a very valuable tool in negotiating when you have a solid approval.
And this, by the way, is also good advice for anybody that's just thinking of doing a real estate transaction. It doesn't necessarily have to be specific to first-time home buyers, but sticking on the first-time home buyer because they're the ones that need the most guidance. Although I will say I've dealt with a lot of people that have upgraded their homes and missed chunks of the process because they thought they knew. So processes have changed a lot. Requirements have changed a lot. So if you haven't bought a home in the last 2 or 3 years, chances are there's a lot that has changed. So if you were to give advice to these buyers on how to get prepared for what you are going to need, how can they get prepared now so a meeting or a call or whatever with a broker can be a lot smoother and expedited quicker?
To be honest, I feel like preparing can happen shortly after that initial consultation. Like, I don't like to make people prepare too much ahead of time. I think starting with the call is the most important thing. Then we'll give you guidance on what you need to actually get the pre-approval, because it always starts with the call first. then we'll take you through the pre-approval process. But a saying that my dad has always said for years, and keep in mind, he started the business and ran it during a very different time than now. He always says a pre-approval is not worth more than the paper it's written on, which used to be true. That's because most brokers and banks back then would just give you a pre-approval at face value based on the application you submitted to them. I don't care. You can put whatever you want on an application and submit it for approval. But how we've changed that is now we're almost fully underwriting a deal as though it is a live deal, firm deal. We're asking for supporting documents, maybe not all of them, but a good chunk of them, to make sure that we're doing our due diligence so that when we give you the pre-approval, you can actually depend on it.
What are the supporting documents that you always require or potentially could require?
Aside from ID, it's tricky. So I don't have to do letter of employment because by the time I ask for it and by the time you have to then provide it to a bank later on, it gets outdated. So rather than being redundant and asking for it twice.
How long would it be good for? 30 days?
About 30 days, sometimes 45 based on an exception from the bank. But 30 gets outdated, then you got to ask your employer for another one. But most recent pay stub, the last 2 years T4s if you're salaried. T4s are helpful. Sometimes NOAs, just to make sure that you don't owe a lot of personal taxes. Bank statements to support the down payment that you have. The banks need to know where the money is coming from. Usually it has to be from your own sources, and your own sources can also include gifted money, but they don't like borrowed money. So if you show me 6 months worth of bank statements and there's $0 in there, they're going to be like, well, where is the down payment coming from? So they have to trace all the money, but I would ask for those. And then anything else that might be needed is just something the bank's coming back with later on. Based on what you've provided to them, there may be further questions and further supporting documents needed. Child tax benefit is another one. You get it, we can use it as income. So show us the latest notice.
Depending on the age of the kids.
Depending on the age,
year,
of
they
course.
may not consider it.
Yeah, of course. I think the minimum age is 12 for most 5-year mortgages, but if you're getting a shorter term mortgage, we can strategize with that a little bit.
So I think one of the questions to wrap this up, because we've gone longer than we usually do, but there's 2 topics we kind of touched on, but one thing that I just want to finish on is in last week's episode, we gave our forecasts for 2024 for the real estate market in terms of where we see values.
This is airing in the new year, by the way. So Happy New Year.
Happy New Year. This is our first episode of the new year.
Correct.
Where do you see mortgage rates or even mortgage guidelines going in 2024?
Okay, so I'm going to answer that in 2 parts. There's rates and there's policy. Okay, so policy is what the banks use to underwrite. And I think banks are at their most competitive time ever. So that sounds funny because we're at the highest rates ever. So how are they the most competitive? And it's because policy is changing. Sometimes policy is tightening, sometimes it's loosening. Banks are really, really trying to drum up new business. And so they are getting more creative with their internal policies to make it easier for people to buy. So they're governed by B20. OSFI comes out with these rules and they have to abide by those rules, but there are certain rules that they can flex on to make it easier to kind of offset some of the tightening that has happened. And so we're bombarded with emails on a weekly basis of banks that are trying to come out with a niche point of difference. Some of them are stupid and we're just like, that is not a point of difference. Like, thanks for the email, but that's not enough. And then sometimes banks are coming out with policies that are like, oh, okay, that could help people who are self-employed.
You mean a free iPad mini isn't going to incent you?
It's such BS sometimes, like the incentives. Like, this is a house. This is so much more than a free anything or the possibility of a vacation from a draw. Like, it's not about that. It's about change your policy, make it easier for people to get into homes and to get into homes at the prices they want to.
Right.
And so we're going to see a lot of that in 2024. So my forecast is that policy is going to be a huge game changer in 2024 and onwards.
Third and fourth quarter for the banks weren't looking so good.
No, actually, I'm just going to grab a forecast. I printed it off. Here you guys. Am I good? Okay, so this is TD's forecast for rates. You guys can keep this after. I don't know, maybe you already keep up to date with it. I just choose TD for no particular reason other than I like their forecasts. So interest rates are expected, well, the overnight lending rate or the policy rate is expected to start dropping by Q2 of next year. And each one of the quarters following all the way until the end of 2025, which is when this prediction or forecast ends, it's expected to drop almost by 0.5 or 0.25% each time until we get to a policy rate of 2.25 by the end of 2025.
Which is half of what it is, more than half.
More than half of what it is now. We're at 5% right now. It's going to go down to 2.25 based on this forecast, which means rates, as soon as rates start,
which means first realtors are going to go broke or bankrupt,
and then they're going to get rich
out of the
again.
business, and then got to pay back all of that debt in 2025.
And that's okay, because you weed out the people that are not great in this industry anyways. And we always need that cyclical period to weed out people, even in our industry.
I like you, Neil.
Yeah, I'm a huge component of that. So
the time where this may not hold true is if a reduction causes a spike in inflation again, like people go crazy and the market goes nuts. The Bank of Canada won't allow that, so they'll say, okay, well, the rates are going back up.
Of course,
they're going to want to maintain.
Yeah, but how much pressure will there be from the big banks too?
It won't matter.
But this is when you're going to start to get interest again, and people will slowly trickle back into the market, as long as it's done in a controlled manner, while also maintaining policy that kind of offsets this. Because that's the problem that happened. There was really loose policy and very low rates for a longer than expected time. And so anybody could go out and get a mortgage higher than they could possibly afford when there was an interest rate hike. So
could have made the movie The Big Short. Big Short Canada. Yeah.
Well, I mean, if it weren't for the whole insured versus uninsurable thing where, you had to put 20% down on $1 million plus, they wouldn't let private lenders go, or they wouldn't let B lenders go above 80%. Private lenders also scaled back to maximum 85, which now they're probably kicking themselves in the asses for, because
for sure.
Some of those lenders are in deep water too, right? But we're going to start to see a spike again. And I just think with effective policy, in addition to lowering the rates, we're going to have a nice balanced market. Now, everyone needs to reset expectations. We're not going to see pandemic level rates again for a very long time. Decades, possibly. Only if there was another pandemic type situation would they need to re-stimulate the economy like that. But everyone needs to reset their expectations to healthy rates, which generally fall in like 3.5% to 4% range. That's healthy.
Yeah. Well, I heard rumors. I don't know where I heard it actually. Something to do with adjustments to the stress test, either removing it or lowering it, or.
Well, they already adjusted it for previously insured mortgages. So now if you are doing something called a refinance, not a refinance, that actually doesn't qualify. If you're doing a switch or a transfer and you were originally insured, then you now have the flexibility to go to a different bank for a better rate without having to re-qualify the stress test. They'll qualify you at the posted rate.
That's a big deal.
It's a big deal, except think about all the uninsured mortgages that happened over the last 3 to 4 years. Everyone was buying $1 million plus, or most people were buying $1 million plus. Those weren't even insured mortgages, so those don't even qualify. And a lot of those people are the ones that really need the help.
True.
So we'll see what kind of loosening in policy happens between now and mid next year. But next year is looking good in terms of home ownership. So I think we will see that spike again.
And so based on these sort of projections, are you advising people to go with like a fixed rate for a short term? Or not necessarily.
Naturally, people are already choosing that by default. People are thinking, okay, let me try to time the market and let me do a 2 or 3 year fixed term, and then rates will be a lot better. And they're probably going to be right, but there's also a possibility that we could all be wrong, because these are all just forecasts.
Yeah.
Oftentimes forecasts are...
Historically, they've always been wrong.
They've been wrong, or the timing has been off.
Yeah.
This could take 3 years instead of 1.5 years to get to that rate.
That seems more practical. Yeah. That seems very quick to me.
It does.
Does it? That's 2 years. But 3 years really since the rate started going up.
And they have an entire team dedicated to making these forecasts based on data and the trajectory of the data based on history, right? So I feel like they're accurate, and maybe 1 or 2 in here may not happen, depending on how inflation, whether it increases or decreases.
Yeah.
But
immigration, lack of supply, spending habits.
Yeah.
No lack of supply right now.
I'll be really interested. really interested to see the results from the last quarter of 2023 in terms of spending and in terms of just what happened in financial markets. And I think a lot of people are holding their money a little bit closer right now. And that's the first time in a long time that I felt that way in our market, and certainly in the GTA.
If you guys are going to wrap up, can I wrap up with a little story?
Yeah.
Just based on my experience.
I love storytelling.
Okay, cool. So my wife and
Just don't fuck it up because
there's no editing. Okay. My wife and I just got back into a home after almost 2 years of selling our previous home. Okay. Because we decided we wanted to piss off Steve and just make him really work for his commission. But so it took almost 2 years. We took our time with it. And so the objective when we sold in November 2021 was we need a change, but we don't want to rush back into a house. And that was priority number one. A secondary thought was, okay, maybe we can also benefit from the inevitable decline in the market, which did also happen. And I think we still benefited from, but we still, maybe we did, maybe we didn't. And it's irrelevant. I'll tell you why. Over the course of that 2 year period, and the reason I'm telling this story, by the way, is for people who are first time buyers, who are maybe renters now, who maybe want to buy and don't know how to get there, or don't know how they're going to feel about it. But during that 2 year period, we temporarily lived in about 13 different Airbnbs.
Wow.
Could have been more than that.
I didn't realize that number was that high.
Yeah. So we moved
13.
probably 15 times, but maybe 13,
Wow.
12 to 13 different Airbnbs, because there are certain ones we went back to a second time just because we liked it so much. So we stayed everywhere from Burlington, Oakville, Innisfil, Collingwood, Guelph. And so my wife was responsible for all of that. She's amazing for that. And so she was trying to find Airbnbs, and sometimes we were limited. But in each one of those places, so it's just myself, Diana, and our dog Chewy, we were able to make each one of those places feel like home. Okay. But we knew it was temporary. So would I want to do that for 10 years? No. Was I okay doing it in that 2 year time frame? Yes. But the point of the story is that in each one of those, whether it was an amazing Airbnb or an okay Airbnb, we made it feel like home. And so why I'm telling the story is for people that are renting, for people that want to get into the housing market, I think resetting expectations is really important. It can't be all or nothing. It doesn't have to be the detached home. It doesn't have to be a semi-detached versus not wanting to live in a condo. Like, start somewhere. You will make it feel like home. And after 2 years of doing that, which was a really exciting experience, getting back into our own house, there's nothing like it. There's no feeling like it. It was really cool to not have to worry about cutting grass and having to maintain things that were falling apart or breaking. But we have no regret with buying a house again, because home is home.
Any Airbnb horror stories?
There was one which we were only in for a week. And I actually got COVID when I was at that one. So it was like, it made it much worse. But it was, supply was very limited. And so it was a basement apartment. And my head was touching the ceiling throughout most of the basement.
So not a legal basement apartment.
No. And so when we got, she had no idea. She was fine in there, but we got in there and I'm like, I lost it. I'm like, no, we can't stay here. So we got most of our money back and we found a different place, which was way nicer.
That would make for good leg exercises throughout the day, right? Having to
just squatting the whole day.
All right. Thanks, Neil.
Thanks for joining us.
No problem. Thanks for having me. It's a good conversation.
Thanks for tuning in and watching this episode of KT Confidential. Let us know your forecast for the 2024 mortgage and real estate industry by commenting below. And if you want more details and updates on what's happening with mortgages, make sure you subscribe to Neil's podcast,
Will You Mortgage Me?
Which
and you can
is-
find that on Spotify, Anchor, and directly on our website at cmsmortgages.ca.
There you have it.